Hi there, welcome to today's edition of Blue Talks. Today, the 30th of April, 2020, and we'll be talking about COVID-19 preparedness and wealth preservation. So a lot of people have been asking questions around how they can preserve their wealth or what options are available for them, investment options are available to them in light of the um, of, of, of the changing global climate, both economically and even health-wise. Today we have a resident expert, head of investment management at Stanbic IBTC Asset Management, Lanre Mohammed, but he's having some technical difficulties, so we'll give him a moment before we for him to be able to come back online. So, hope you have your questions ready. We had a session on Tuesday, and some people were asking questions about asset management. So this hopefully will address those concerns, and any further concerns will tell you on how you can reach out and ask those questions after now. Let me try and see if we can get him on here. Okay. Brilliant. Larry, can you hear me? Hi, Larry, can you hear me?
Hello, can you hear me?
Yes, we can hear you.
Okay, brilliant. Okay.
Okay, you had a bit of a challenge over there.
Yeah.
So I was just talking about we're just talking about you briefly and what the what people should hope to expect from the presentation. Like I said earlier, Larry is the head of investment management at Stanbic IBTC Asset Management, and he'll be taking us through some options and helping us getting ready for post COVID-19. Even from now, what options are available to us as potential investors. So, without much ado, Larry, I think it's your turn to take over.
Okay. Thank you very much, and good afternoon, ladies and gentlemen. Apologies for coming on a bit late. It was due to some technical issues. So without wasting further time, I'll just like to quickly talk to you about COVID-19 and preparing for wealth. I mean, for preparing for managing your wealth during this period and even after. So how you can potentially preserve your wealth. Having said that, so I'll quickly introduce who we are at Stanbic IBTC. We'll talk about the impact of COVID-19, then a couple of investment options that we have available for you. So, by way of introduction, we are Stanbic IBTC Asset Management Limited, a subsidiary of the Stanbic IBTC Holdings PLC, a member of Standard Bank Group. We're a registered fund manager with the Securities and Exchange Commission. Currently, we have assets under management in excess of 700 billion, and these have been put in our care by over 120,000 customers who trust, who trust what we do. So we serve these customers, through 14 collective investment schemes or mutual funds and over 100 standalone portfolios. Our major fund, our flagship fund, is the Stanbic IBTC Money Market Fund, which is the largest in the country, assets in excess of 300 billion naira. We also have the Stanbic IBTC Dollar Fund as well, which is also a very popular investment product with assets under management in excess of 260 million. So we offer a range of products across fixed income, equities, the dollar fund. We also have Sharia funds as well. We have two of those, which is ideal for our Muslim brothers and sisters. We also have exchange and traded funds as well. So I would just like to quickly talk about how we view the investment world, at Stanbic IBTC. So first and foremost, this speaks to our investment philosophy. And first and foremost, what we put priority on is really safety of funds and the return of capital to our investors. So what we are saying is that when you give us your funds to manage, on your behalf, right? We ensure that we are very responsible in the way and manner we manage those funds, in the investments that we put those funds, into, so that we don't come back and start, telling stories that, oh, we've done this, we couldn't, provide your funds to you when you need them. So we also focus on diversification, right? That's why you can see that we have about 14 mutual funds, under management, and that's probably the highest, offering from any fund manager within the country. Again, we have the dollar option, we have a lot of naira investment options as well. We also look after these investments, through a very robust risk management framework, and that's even very much more important during this period, where people are very nervous because of the implications of COVID-19, the economic impact, and all those things. Then, having said all that, we try to deliver sustainable long-term returns, and I would like to emphasize that sustainable long-term returns. So we are not the type of entity that will promise you some ridiculous returns, 500%, 1000% returns in 6 months and all that. No, we are not in that line of business. What we try to do is to ensure that we manage your funds responsibly and deliver reasonable returns within clearly defined risk thresholds, right? So that's very, very key for us, and that's how we view the whole investment world. Now, in terms of COVID-19, and the impact, I will not speak too much about that because, over the last 2 months, a lot have been said. We know that the reported cases are rising. The number of reported deaths are also rising as well. We know all the stories. And just to quickly compare it with other pandemics that we've seen, between 1900 and today, the worst has been the Spanish flu, which is estimated to have claimed over 50 million lives. COVID-19 is not there yet, and we hope and pray that it doesn't get there. But so pandemics, they happen, they change the way things are done, they change the world. But I hope and expect that this will not be the end of the world, because we've seen quite a lot of those in the past as well, and the world didn't come to an end. So just to mention, it's having significant implications, across the world. The IMF has revised on the growth expectations across different countries. As you can see, it's a bloodbath expectation for 2020. But very importantly, supply and demand chains have been disrupted. We know the story around crude oil. Prices have crashed significantly, and Nigeria typically depends on revenue from that space. So I won't take too much of your time, and I'll just move on. So on this slide, I would just like us to focus on the outcomes or the potential outcomes. So we've talked about the implication on crude oil. Banking sector might have issues if people are unable to pay. Companies are unable to meet their obligations to the banks. We are aware of the lockdown of the different cities, even though those have been relaxed now, but the impacts are still going to linger for a while. So we expect that there will be lower corporate income. And what does that mean? You start seeing companies talk about, we need to rationalize, we need to optimize costs, we need to do this and that. But ultimately, having said all that, it could mean one or two things. Pay cuts. Some companies are already doing that, or right now. Some will lay off. Some are doing that already. And what that means is rising unemployment. In some of our areas, we are aware of the increases in crime rates. Those are some of the things that will happen during this period. Then, just to emphasize again, when people don't have enough resources to meet their obligations, then defaults are likely going to happen. Companies are likely going to default. Individuals are likely going to default on their finances, on their debts as well. So so just to put things in proper perspective, right? As you can see on this slide, this slide asks the question, well, where does the money go? So what do you spend your money on? The picture on the top left, that shows debt, chasing an individual all over the place. It doesn't look like he's going to survive it, and that is really the story of so many people, right now. So if you've been in that situation where you have, significant debt on your, as part of what you spend your money on, or as a major, part of your spending, right? Then you need to be worried. You will be very, very worried compared to someone who is not, in that type of situation. Now, if you look at the bottom right, I'm sure you can barely see what's there: save and invest. So you spend a lot of money servicing debt, a big car, right? You eat. Yes, I can't blame you for eating. Then you can see the one on top. It says peers. People do B and all those things. But you now have very little left in terms of saving and investing. Okay. I hope that at the end of this session, we will be able to, change that pattern of behavior. So, just very quickly, what can you do during this period? What can you invest in? Right? I'll go through a couple of investment options that we offer at Stanbic IBTC, and hopefully, you will be able to find one that fits your profile. So, starting with the Stanbic IBTC Money Market Fund, which I explained to be the largest fund that we have under management, over 330 billion. It's pretty much invest in fixed income securities so that the capital is preserved to an extent. So there are no guarantees on this fund, especially in terms of returns. We are not allowed to guarantee returns on funds under management by the Securities and Exchange Commission. So a mutual fund will not guarantee you, a specific return. However, we can provide an expectation, right? And that is driven by the underlying instrument. So it invests in treasury bills, commercial papers, fixed deposits with banks, and government securities that are short dated as well. And the focus of this fund is really liquidity, right? So that once you come in, you can easily unlock, unwind your investments and do whatever you want to do with your money. It is not a straightforward replacement for your savings account. However, it just provides you with an extra option for saving. So after you've taken out all your immediate expenses, whatever you have left that you don't have an immediate need for, this is the fund that speaks to that essentially. So minimum subscription with as little as 5,000 naira, you can get started. So there's a minimum expected holding period as well, which means that once you are in this fund, you're expected to remain in this fund for a minimum of 30 days. If you liquidate your investment before then, yes, you can do that. Your principal will not be, touched, but the accrued income on your investment will be touched. So you are going to forfeit just 20% of what you've accrued. But if you stay beyond 30 days, then you can go away with all the income. And it's just to emphasize the fact that it's an investment product, as it is. And a lot of companies make use of this to manage their, liquidity. So some companies that don't have immediate needs, right, they can always, make use of these products to manage their liquidity. So it's good for companies and individuals. Next one I'll talk about is the Islamic IBTC Bond Fund. Okay, this can also achieve the same objective, but it's for investors with a longer term horizon. So, whilst the money market fund has a minimum expected holding period of 30 days, this has a minimum holding period of 90 days. Same principle applies. If you try to liquidate before 90 days, you forfeit only 20% of your accrued income. After 90 days, everything you can take along with you. Again, minimum subscription is 5,000 naira only. But the key difference, between this fund and the money market fund is the fact that this fund invests a minimum of 70% in bonds. And bonds are longer dated instruments compared to money market instruments, 1 year and above, where you get periodic interest payments. So this fund typically invests a lot in those type of instruments, and that's why the holding period is a bit longer. However, we continue to provide liquidity as you require such. Then this fund also has the ability to deliver a higher return than a typical money market fund, and it's because it invests in longer dated instruments, which under normal circumstances will provide a higher return on investment. So again, highly liquid, low risk, investment. Capital is preserved to a large extent, and the return is a bit more competitive. The next fund I will talk about is the Islamic IBTC Absolute Return Fund. Um, this fund is actually designed for high net worth investors and institutional clients as well. The minimum subscription here is 20 million naira, and there is no minimum expected holding period, because the investors you find in this type of fund, they are pretty much liquid. They're able to plan their cash flow needs better. So you have people that will be in this fund that make periodic requests, maybe once a month or once a quarter. So it's pretty stable, and it also invests in fixed income securities alone. And as such, the investments are preserved, the returns are stable, highly liquid as well, and it provides steady growth to investors. Now, this is the Stanbic IBTC Dollar Fund, which of course, continues to generate a lot of interest because of the currency factor. So it's currently over $260 million. Um, it invests predominantly in euro bonds. A minimum of 70% of the fund is, allocated to euro bonds, and it's also a good investment outlet, particularly for people that have real needs, real obligations to meet in terms of foreign currency. So maybe for your foreign education, medicals, even for people going to people relocating, they tend to use this fund to save towards that sort of objective. This one has a minimum expected holding period of 180 days, just to emphasize that it is an investment product. It's not meant for speculation, as a lot of people, will do, because you feel exchange rates would depreciate. You start buying dollars and looking for outlets to put it in for a short term. This fund is actually supposed to be for long term investing, not for speculation. You know, make sure you have a clear and focused investment objective. Particularly when it's tailored towards meeting dollar related obligations. I'll quickly go on to talk about this Stanbic IBTC Guaranteed Investment Fund. Now, the guarantee here does not imply guaranteed return. We are only saying that, look, if you stay beyond 3 months in this fund, then we are guaranteeing your principal, okay, from any sort of diminution in value. Now, this fund invests a minimum of 70% in bonds as well, a maximum of 30% in money market instruments, and a maximum of 10% in equities. So that's why we are saying that, okay, even though we might invest in equities, but we are saying that we'll make sure that it's done in a way that does not diminish your principal. So that's why we've restricted the equity exposure to a maximum of 10%, so that we're able to manage that risk. Again, minimum holding period 90 days. It's a retail product with as little as 5,000 naira. You can invest in this product, and you can easily liquidate your investment. Um, so having covered the fixed income products, at least with what we know now, we should be in a position to start growing the investment, the savings and investment bucket. As you can see, it's a bit larger on the top and on the bottom left of the slide now. Debt is reducing, so we are hoping and expecting that after this session, you start making the required change. So now I will quickly talk about the equity focused funds, starting with the Nigerian equity fund, the Stanbic IBTC Nigeria equity fund. Now, this fund is highly volatile, even though it's liquid as well. And the reason is because it invests a minimum of 70% in equities, listed equities. So again, yes, if you are looking for a significant return, this is the type of investment that you might want to consider. However, you need to be very, very clear about your risk appetite, okay? Because there will be periods whereby the value of your investments could go down because of the volatility in the stock market, which could be related to what goes on within the economy, company specific issues, and all that. So right now, year to date, the stock market has lost about 15% or thereabout. So those sort of movements would reflect in this type of fund. And when the market turns around, this fund is going to benefit from the upside as well, right? So investors need to be very, very clear about what they are investing in. Make sure you understand the underlying instrument, so that if you see sharp movements in your investments, right, you will not be worried. You won't think that maybe the fund manager has mismanaged your funds and all those things. So it's the nature of this fund. And when there is a decline in stock prices, that's when these sort of funds have the opportunity to actually buy even more. So the minimum is there 70%. So it means even if there is a significant dip in prices that brings you below that minimum, the fund will need to, top up to at least 70%. Then when things now become more stable, the investment will then begin to appreciate and will reflect in your fund. So the next one is ethical fund. It has the same investment style. The only difference is just that the type of companies that this fund invests in are listed equities in socially responsible sectors. So it doesn't invest in the brewery sector, for example. So that's the main difference between those two funds. The next one is the Stanbic IBTC Aggressive Fund. Just like the Absolute Return Fund that I described earlier, this is also designed for HNIs and institutional investors, and it's just the equity strategy part of that type of offering. So minimum of 70% in equities as well, highly volatile, high risk, and it's designed for long-term investors that can really cope with the movements, the movements up and down, within the investment. So the next one is Steinbeck IBTC Balanced Fund. Now, this fund just tries to find that delicate balance between, providing that upside to equity investing, as well as ensuring that you preserve your investment to a large extent, right? So essentially, it has a minimum exposure of 40% to equities, and then a maximum of 60% in fixed income. So we try to stay within the range of 40 to say 60% in equities, so that when the market is bullish, you can benefit from the upside. But when there's a downturn in the price trend, the market trend, then your risk is limited in terms of the kind of losses you will likely incur. So this provides that balance. Again, it's a retail product. With 5,000 naira, you can get started. Um, 90 days minimum holding period. The next one is the conservative fund. Also, this provides a more conservative approach to investing for HNIs as well. Um, Maximum exposure to equities is 30%, and then when the market is not in a very good condition, or when there is heightened risk or negative expectation, this fund can easily scale down as much as possible in equities. And so it provides that a bit of an upside to equity return, and then the downside is intact in terms of the minimum allocation to fixed income investments, which sort of provides stability to the fund. The next funds are the exchange traded funds, high risk, 100% allocation to an equity index. So for this one, the index is the NSE 30, which is the 30 most capitalized stocks on the Nigerian Stock Exchange. So this one tries to replicate the performance of that index. So if the NSE 30 does well, this one does well. If it does poorly, it does poorly. But it is really for investors who have the risk appetite. It's not for an investor that is interested in, capital preservation, stable growth, and all those things. It's for investors that really understand how equities perform. Yeah. Then the next fund is the ETF 40, which tracks the basket of 40 securities that pension funds can invest in. So it's also good for institutional investors that like that investment strategy, or for individuals that have that risk appetite, high risk appetite for investing in 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 equities. So you need to understand the underlying instruments within your investments as well. I'll continue to emphasize that it is very, very important, so that when you see the movement in performance, you will understand the reason why those investments are performing that way. So having talked about that, again, I'll come back to this slide. We expect that you will begin to allocate even more to the savings and investment bucket, continue to reduce that debt, right? And then you should be in a better shape. You won't be so concerned about COVID-19's impact on your financing if you've actually been doing things like this all along, compared to if you're just caught unawares. So I'll quickly talk about the Sharia compliance funds that we have. So again, we have two of those. One is high risk. It invests a minimum of 70% in Sharia compliant equities. So in addition to companies like Bureaus, this fund will not invest in companies in the banking sector because Islam prohibits interest payments. Also, in terms of fixed income securities, it only invests in Sharia compliant fixed income securities like FGN Sukuk or other Sharia compliant contracts. And this fund is overseen by an advisory committee of experts, Islamic scholars, headed by is, Imam Abdurrahman Ahmad, who is the chief missioner of Ansaruddin Society of Nigeria. There's also Dr. Mansour, who is a lecturer in Usman Danfodio, Sokoto. And we also have a third member who is based in South Africa, um, Mufti Ahmed Suleiman, right? So what that does is it brings in, that international exposure, expertise, and, support from that level. So they look at what we do, they help us with the security screening, and at the end of each year, they issue a Sharia compliant certificate just to show that okay, they have looked at all that we have done on this fund, and it's in compliance with the principles of Islamic investing. So again, minimum of 5,000 naira, you can invest in this fund as well. Then the next one is the Sharia fixed income fund, which is our most recently launched mutual fund. We launched it in August of 2019. It invests in fixed income securities only, and that's just meant to provide that alternative option for investors that have a better focus or higher focus on capital preservation, and low risk and all those things. So a minimum of 70% is invested in bonds that are Sharia compliant. So Sukuks, mainly, and then the balance is invested in other Sharia compliant fixed term contracts with other institutions. Okay, so those are the product offerings that we have at Stanbic IBTC. So before we go on to start taking questions, I'll just like us to reflect on a few more slides. So this has to do with compound interest. Someone said the greatest invention the world has ever produced. That's compound interest. The same person said, the eighth wonder of the world, and he who understands it earns it. He who doesn't, will pay it. So those are some of the things Albert Einstein told us. And Thomas Fuser also said that a fool and his money are soon parted. So if we don't quickly begin to capitalize on this idea of compound interest, okay, so many things are going to take our money from us. We've talked about debt and how that will happen. We've talked about other things that people need to spend money on. So we need to pay attention to issues of saving and investing. Let your money work for you, and then you can reap the benefits. So here, one of the things that will always compete against you is inflation. And Milton Friedman says, he said, inflation is taxation without legislation. So nobody's going to, seek anybody's permission or, try to deliberate on, okay, how much should it be? The thing just happens. And, before you know it, the money that you spend on something yesterday will no longer be able to take care of that same thing today. So there, a brand new car in 1980, our parents used to tell us, oh, with 10,000 naira, you could buy a 504, or with 14,000 naira. Take your 14,000 naira to a car dealer today. I'm sure they will not even open their door for you to come in. Okay, so inflation takes from the ignorant and gives to the well informed. So now I believe at least we are informed to an extent, and the expectation is that you will begin to take steps if you haven't started already, and if you have started already, then you should do a lot more so that you can combat inflation. And according to Margaret Thatcher, the lesson is clear: inflation devalues us all. So at the end of the day, inflation and devaluation, they go hand in hand, especially when you look at the makeup of our economy, where we import a lot of items. Even the companies that produce locally, many of them import a lot of raw materials. And so long as there is continuous devaluation or depreciation of naira, things will certainly get a bit more expensive. So this is where I would like us to be, where savings and investing, will form a larger part of what we spend money on, and then we improve ourselves. I hope I have impacted positively on you today, and then let us try as much as possible to reduce debt. If you must take debt at all, let's try to ensure that it's good debt that we are taking out there. Good debt, it means maybe debt for investing and things like that. So in terms of next steps, this is just a call to action so that it's not just talk alone. So make sure you go back and review your current status. What do you spend money on? Um, the need to have a financial plan cannot be overemphasized. I know that you must have heard a whole lot about that. And prioritize saving and investing. Try to reduce your debt. You can consult a financial advisor, for more information, for advice, for clarity on how to go about it. Stanbic IBTC Asset Management, will always be there for you. And then please start investing, and please be clear about your objective. Okay, so it shouldn't be a case of you just want to invest because you just want to invest. So why do you want to invest? And so, for example, you need to be very, very clear. And I'll give a very quick example. So this gentleman calls me and says, "Oh, I want to invest. I'm looking for something that can give me, a decent return, or not decent, a significant return and everything." And after going through all these products, making it clear that look, what you're looking for, it is only an equity biased, product that can deliver that kind of return. But there are certain risks that are in there and all those things. But he still insisted that he wanted to make that investment, right? After asking a lot more questions, it turns out that he got some funds from his brother living in Canada. The guy sent him some money that, okay, please help me complete my house and all those things. But because of COVID-19, the guy thinks he can quickly put it in some investment scheme over a 1 or 2 months period and come out and all those things. He thinks he has a high risk appetite, but by the time we unpacked all those things, right, we got the information that look, you can't afford to do that, because if you do that and you get burnt, right, you're going to have problems with your brother. You're even going to have problems with me, because you come and tell me that, okay, I put you in that kind of fund and all those things. So it's important to really unpack the type of appetite that you really have in terms of risk, and then make an informed decision based on the various product options that are available. So how to sign up? Very simple. Complete the KYC forms. Um, you can scan it back to us, and you can submit it at any Stanbic IBTC branch, that is close to you. Thankfully, the lockdown, has been relaxed now. Banking operations, should commence, soon. Sign up via our instant account and platform through our website. Then you make payments, and then you receive your login details, and you can view your investments, your statements via your mobile app, as well as the website. Um, this is just a list of the account opening requirements, and once you have all those things, you can start investing. So thank you very much. I think we can start taking questions now.
Wow, so much,
Thank you.
so much, so much, so much said in such a short time. I don't know how you differentiate between those ones, but the one thing that captured my mind, and I think that captured a lot of people's attention also, that slide. Could you go to that initial slide where you showed debt big and you showed other things there? Um,
Mm,
that's first one that you did there. I think
mhm.
it just paints the picture clearly for everybody, in terms
Yeah.
of perhaps what the reality is. Yes. Is it this one?
I'll get to it now. Okay,
This one, yeah.
please. Yes.
So, and I think it just painted the picture in terms of the ratio of debt to other things there. But debt is bigger than food. So, but really, really clear. I think this is the most impactful slide that I saw through all of that, and it speaks
Mm,
to um, some of the things people are saying. In fact, let me even take on that. Somebody says, so um, is it wise now to be trying to either invest more or paying down on your debt?
mm. Okay.
I'm wondering what the correlation is. Every money you need, you want to invest, you invest, but you're the expert. Maybe there's a solution there. I don't know.
Yes, okay. So I will say there is no, I mean, there's no straightforward answer to that. There are different perspectives to the conversation. So you have different types of debt. Okay, so if you've taken debt to buy this type of beautiful car that we have here, right? The truth of the matter is you have an obligation, and you also have a reputation to protect. So you can do a couple of things. You can go and negotiate the terms of your debt, service, repayment and all those things. You can renegotiate so that you can have a bit more room to start investing. And if it is convenient for you, okay, you might as well pay down the debt and then quickly start making investments, right? So I don't expect it to be, an immediate shift, right? So that's why you need to settle down, look at, okay, what type of debt do I have, around me? Which ones can I pay down first? Targeting the most expensive ones, in particular, and then try to remain disciplined about it, because after you, come up with a plan and then you are following through on that plan, after a while you see something fancy again, then you might easily go back, to where you're coming from. So just sit down, look at it holistically, be honest with yourself. What are those things that you really need, to be spending money on? If debt is part of them, you need to just work it out with your creditors in terms of creating some room for you to be able to grow the save and invest, the savings and investment portion of your debt.
Okay, thanks. I appreciate that. What will be the new order of doing things? Because from the way things are going, we can see a shift and change in the way things were being done. As a company and individual, what should be our focus?
Hmm. Okay. That's a very useful question, a very good question. I think you have to sit back and look inwards first, right? And ask yourself how relevant you are now and how relevant your company is going to be after this COVID-19 period. And I'll give a few examples. So for example, you need to start thinking about if you're in maybe the business of entertainment, right? How will people begin to look at that space? Especially where you have a lot of people in the same, in the same room, probably at a cinema or things like that. Okay, you need to start thinking about how people will start thinking in that light. Will they want you to, put in more? I mean, to space out, the seating arrangements and all those things. So that's just one side of it. And in whatever business that you are in, you really need to look at what you are doing. How relevant will it be, during this period and after this period? So, for example, we know that data, is almost like gold now. Everyone is using it, call time and all those things. So those are relevant. And then you need to also ask yourself, what will people be asking for during this period and and after, and then try to migrate towards those type of things. In terms of the way things are, I mean, things will be done, going forward. So an example is this whole working from home, thing that almost everyone is doing now. I think a lot of companies will continue to do that even after this, COVID-19 experience. And for some people, you find that you are even doing a lot more working from home compared to when you were doing your regular 8 to 5, function. And then it gives companies that opportunity to actually even reduce the office space that they pay for and all those things. Yes, thank you.
Okay, thanks a lot for that. I mean, I've heard that a lot. I just have people complaining that it seems as if they're doing more work, as if they were playing before when they used to go to the office. And I'm like, well, maybe it's because they have to deal with other things at home as well, especially people that have families.
Mhm.
Somebody wants to know, how has the current rise in USD exchange rate affected FGN bonds?
Okay. So even though there's a link, probably a chain of things to look at, but I'll just like us to focus on the inflation part of things, right? So for example, if you had $1 million before and you converted that to naira to buy an FGM bond, right? Your 1 million could buy you 360 million naira worth of FGM bonds. Now with devaluation, $1 million today will buy you $1 million today, yes, will buy you a lot more, FGM bonds, right? Because if you are changing at, let's say, 400 or 450 million, so that's what will happen. So that's a link between the two. Now, if there's an appreciation in naira, of course, it goes the other way.
The other way,
Yeah,
yeah.
yeah, absolutely.
Okay, thanks for that. So what are somebody wants to know, this is very practical, very granular. What are the possible returns on investments from, and it's going to put you on the spot. And I know the way you're going to deal with this, but what are the possible returns on investments from 200,000 to 250,000, and what is the redemption process? How long does it take?
Okay. So in terms of the in terms of what you can invest in, so I've gone through a list of products, right? So we have 14 of those. Like I said, you need to be clear about your objective. You need to be very clear about your risk appetite, and then you can select from any of those options in line with your risk appetite. So if you have a lot more focus on preserving your capital, ensuring that you earn stable, steady returns, then you want to look at a fund like the money market fund, the bond fund, right? And the return expectation, of course, will reflect the underlying instruments, the money market instruments that it can invest in. So it won't invest in all those investment schemes or opportunities that are not regulated by the Securities and Exchange Commission. So you will invest in treasury bills, in bank deposits, and of course we have internal risk framework as well, whereby we look at the institutions that we place funds with. So it will reflect, that sort of return. And if you have a longer term, horizon, you can select any of the equities and products which are expected to perform when things begin to stabilize. Then
Okay.
I think the other part of the question has to do with the redemption process. Okay, so you can actually redeem online if you go onto our website. You can redeem via our mobile app, and you can also fill out a hard copy redemption form, and you send to any of our bank branches, right? And so by regulation, we can it can take up to 5 days, but we typically deliver redemptions between say 2 to 3 days.
Thanks for that clarity.
Thank you.
So there are a lot of questions around the dollar fund, and I'm just going to try and group everything. So people want to know: is this the best time to invest in dollar fund? Is it the best time to buy shares? Would you say is um, primarily due to the devaluation of the naira in itself? So people want to know those questions. And yeah, pretty much. Let's even deal with that first, and then we'll move on to the other parts of it.
Okay, so thank you very much. That's a question that people have been asking a lot these days. Particularly around the dollar fund and all those things. So I would like us to look at it from the perspective of our investment objective again, right? So if we are trying to speculate against the naira, okay, it's going to devalue, then you are looking for a quick safe haven. Yes, you can buy dollars and all those things, but the dollar fund really is not for speculation. It is for real investors. Okay. And this is our country at the end of the day. And we should not all be doing things that can continue, to put the country in a difficult position. So in as much as yes, it's important for us to protect ourselves, we need to be careful about how we go about it. Now, for people that have, clear obligations. So for example, you have children studying abroad, right? You have medical expenses to cover. You have import needs and all those things, right? You can make use of this dollar fund. It's a very, very good avenue for you to actually save towards those type of objectives. Okay, so for example, even an oil company, right, that is suspending maybe their capital expenditure plans because of the way the market is, might want to consider a fund like the dollar fund, at least, just to at least keep their funds, save it towards when they will now be needing those funds. But we really like for people to be focused about the objective and why they are doing so, because certainly it will pay you higher than what you would typically get from your term account. You probably get zero or next to nothing, so you can still make an income on the dollar fund that is dollar denominated. But let us be very, very clear about the objective of making those investments.
So dollar fund versus shares versus treasury bills.
Okay, so I've loved for us to compare, like with like. So even though they're all investment outlets, okay. So
Okay.
someone investing in a dollar fund, the dollar fund is a fixed income product. Okay, the income accrues gradually over time. However, the stock market, doesn't offer you that luxury of stability, but it can easily help you to double your money, over time. But there's no definite, period as to when that is going to happen. Okay, so right now, yes, I mean, stock prices are quite cheap. If you listen to Akin Bamidele a few days ago, he mentioned that stock prices are quite cheap. So for investors that have the appetite to go for the long haul, you can
They can
invest
mop
in
up right now.
equities now. But you also need yes, you have to be very, very mindful that there could be diminution in value in the short term, and you should be able to live with that.
Okay. So clarify your objectives to know and speak with an advisor. I think that would be appropriate for some of those questions there. Um,
Absolutely.
so somebody says I'm very risk averse but looking to invest seriously. Kindly advise.
Mm. Okay, so we can always start from the Stanbic IBTC money market fund. So if you don't know anything about investing, a fund like Stanbic IBTC money market fund is ideal. A fund like Stanbic IBTC bond fund or any of the other fixed income products that we have spoken about. Okay, so you can select from those. They offer you that stability, capital preservation, and then as you begin to learn or understand more, then you can start to go into other more interesting investment opportunities and outlets.
Okay. Um, the somebody says, can you speak on the guaranteed fund as an investment instrument that you
Okay.
have? I know you mentioned it earlier, but could you just give a few highlights about it again?
Okay, so what the fund does is that it's a safe investment scheme as well, and it invests a significant portion of its assets in fixed income securities. It also invests a minimum of 70% in bonds, right? And that provides that interesting income on that fund. Now, there's there's an allocation to equities in that fund, and we know that equities can move up or down, depending on market conditions. So up to 10% of the fund may be allocated to equities, okay, and that can potentially put a portion of the fund at risk. So what we are saying is that if you are invested in that fund and you stay in that fund for 90 days or more, we will guarantee that under no condition will your principal go below what it was at the onset of the investment. So that's really what the concept of guarantee within that investment product is talking about. That's what it's really focusing on, right? Guaranteeing the principal, not the return or expected return. Okay, because it's a pool of funds where people come in together at different times, and then investments are made based on prevailing market conditions. So it's difficult to guarantee the return the return on funds like this. So I hope that sort of answers the question. And it's also a retail product with as little as 5,000 naira. You can start investing in that product.
I mean, I noticed that quite a number of products actually have a very low barrier to entry, 5,000 naira to be able to, I mean, to be specific. So I think there are a lot of options for people. Again, like you said, depending on their risk appetite, and what their objectives are in the long term and the short term as well. I was actually surprised to see some of those options there.
Mm.
In there. Somebody says, on Tuesday when we were speaking with Ruby was, and she kept reiterating that cash is king, which is true. Somebody is now
Mhm.
asking, is it wise to hold on to cash now?
Mm. Okay, so if we go back to one of the slides that I touched on, where we talked about inflation. So when you keep cash idle under any condition, right, you have inflation to battle with. It increases, month on month, right? If you follow the publications of the Nigerian Bureau of Statistics. So
Mm.
for idle cash, right, you are losing money instantly. So it is never good for you to hold idle cash. Worst case scenario, just put it in a mutual fund and let it be there until you need it. Okay, liquid. There are highly liquid mutual funds. So instead of you keeping that cash, in an account earning zero, just put it to work and let it continue to compound until you need the money. You could save towards your children's school fees or your personal education. You could use it to save towards anything, but please don't leave cash idle.
Okay. Um, we're going. There's still quite a number of questions around the dollar, so we're trying. I'm trying to go over some of the other ones, and then we'll get back to that very shortly.
Mm.
Again. So somebody wants to know what's the minimum amount you can invest for sustainable long-term returns?
Minimum amount you can invest for sustainable long-term returns.
Yes.
So, I mean, if we look in the direction of the products that we have on the table, right, with as little as 5,000 naira, you can start, investing towards long term. However, I would just like to emphasize that, you will get to your destination faster if you commit more. So, not don't make it a one-time investment, right? So, if you let's assume you are
Make
trying
it a
to get to
habit.
1 million, yeah, make it a habit. Thank you very much. So make it consistent, do it regularly, and then you'll get to your destination, a lot faster, through many of those products that we have already highlighted.
Okay, I mean, permit me to say this, like saying you want to travel over 300 kilometers from Lagos to Abuja. It's a 700-kilometer distance, and you fill your fuel tank once, and you think that that's all that it will
Yeah,
take you. That will take you there.
I don't
Once you
agree.
need to, you will be surprised when you get to some locations and realize that you need to top up. So
Of course.
somebody wants to find out, is equity investment worthwhile in consideration of the economic downturn?
So I mean, I think it goes back to your objective, and your ability to stay the long haul, because nobody really knows when things will begin to improve. But if you have a very long-term perspective, you can begin to look at equities, because many of those companies have been badly bruised already, and then you'll be buying them at a lot cheaper. You'll be buying them a lot cheaper than you would have done if you wanted to say buy those companies sometime last year or so. So yes, I mean the prices are looking good. You could do that, but make sure you have the appetite to actually stomach the
The ups and
volatility.
downs.
Yes, and then be ready to stay for a longer period of time.
Okay, somebody wants to know and says, okay, let's go back to some of the dollar phone questions. We're wrapping up shortly. Um,
Mm,
do you have other investment of dollar options that don't require up to $20,000, which is the minimum for SIDF?
Okay, so right now, that's the most retail entry point that we have, for a dollar investment product. So for a mutual fund, yes, that's the only fund that we have right now in terms of of dollar exposure, and the minimum is $20,000 dollars. But there are other investment options like making direct investments in euro bonds, but that's really for HNIs and institutions because it requires a minimum of $200,000. So for Stanbic IBTC, it's just the dollar fund, and for now, the minimum entry amount is $20,000, and it's just to emphasize the fact that look, to encourage you to be consistent and be clear about your objective, so that if you really have some obligation that you need to finance, okay, just save towards it. When you get to the $20,000 mark, then it's clear that look, that you are not just looking to speculate or looking for a quick gain. It's you've been consistent, and then you are really ready to start to consider making those sort of investments.
Okay, a quick one. Somebody said the dollar fund is 70% invested in euro bonds, based on your presentation earlier. But what is the rest of the funds invested in? What's the other 30% invested in?
Yeah, so the remaining 30% are invested in dollar-denominated deposits with banks,
Okay.
in Nigeria. So yes, the various banks, yes.
Okay. Pretty much I'm trying to see if we scored one. Somebody was asking, oh, how do you source dollars? How can they invest in? I mean, you've answered that repeatedly, but saying how can they source for dollars? I don't know if you want to answer that.
Yeah. Well, how can you source for dollars? Well, I think first of all, you need to understand what the CBN guideline says in terms of sourcing for dollars, and then what you're expected to do with the dollars, right? So I think we need to go back to what the regulation says, and then be very very sure that we are not in breach of any regulation, so that you're not patronizing probably who you're not meant to be patronizing, and then you're not buying dollars from sources that you're not supposed to be buying dollars from. But like you had we had mentioned earlier, just try to consult a financial advisor, and that advisor will be able to unpack your circumstance, and then will be able to give you an informed advice on how to go about
Okay.
it. Yes.
So here's the final question now. Will
Mhm.
Treasury bills rates increase now if the government decides to internally borrow than borrow from external sources?
Well, the jury is still out there, if you ask me. And interest rates, just like we know in economics, I mean, interest rate direction is always a function of demand and supply. So
Yeah.
if there is more supply of securities, right, like treasury bills, if the supply increases, and then you don't have a lot of funds in the system to actually demand for that supply, right, then you will likely see interest rates go up. But if it doesn't turn out that way, then it's not going to happen. So it's a function of market liquidity, market demand, as well as the quantum of those securities that the government intends to borrow. To borrow. So it's a combination of those things. So it remains to be seen how it's going to play out eventually.
Thanks a lot, Larry. It's been very insightful, very informative, and I mean, I've not seen these many questions on any of our sessions, but I think you've done justice to it. People have commented on YouTube about the quality of the presentation, and well done. Thanks a lot for all this.
Yeah.
I love this slide. I think we should share it. I mean, the ratio of debts to every other thing there.
Mm.
In that sense. This has been, thank you viewers for tuning in. You can catch this on YouTube as well, again, to rewatch it. And we'll share the slides as well. Some people won't have the slides so they can get an insight into it or revise it afterwards. Then. This has been an edition of Blue Talks today. Until next time, stay safe. Bye.
Thank you. Bye.